Well, hello everybody and welcome along. Nice to have your company just after 3 o'clock on this Wednesday afternoon, the 8th of July. I'm not sure what the weather's like where you are, but where I am on the Kent coast, it's raining hard. So lovely weather for July. Welcome to this special webinar on finding a care home, all part of Glad to Care Awareness Week. My name is Glenn Thompsett and I'll be your host on this session today. Now, as you know, we're halfway through Glad to Care Awareness Week, which celebrates the tremendous efforts of those working in the care industry. Here to talk more about choosing a care home, we have today with us Debbie Harris from Autumna. Debbie, nice to see you. Alison, Courtenay, legal expert at Parfitt, Cresswell solicitors, and Nicky Cave, managing director of Eldercare Group Limited. Now, just a bit of housekeeping before we kick off. Obviously, you've got the question box there. You can put in your questions and we'll ask the questions as we go through the session today. And each of our attendees, our panelists rather, have, of course, a PowerPoint presentation to show you, which we hope you find really interesting. Let's start off with Debbie then. Debbie Harris. Debbie's founder of Autumna. Autumna is the largest directory of registered social care providers in the UK. They provide impartial advice for self-funding families who are looking for care homes. And with over 10 years experience in this sector, their expert advisors can answer any questions you might have on their free advice lines. So Debbie, good afternoon. Over to you.
Thanks very much, Glenn. Right, let's see whether or not technology is going to work for me. And I will share my screen with you. Do tell me when you can see the screen. Yep. Is that live?
Yeah.
Yeah, wonderful. Okay. So hi everybody. So the objective of the next 10 minutes is to give you some key insights to help you make an informed choice, informed being the key word there, about your care options and to ensure you find the very best care that suits your particular needs. So it's all about you and the care you need. So I'm going to talk about 4 main points you need to think about when you're looking for a care home. Now these apply at any time, but they are very much more significant during lockdown when you're unable to visit due to the restrictions that are imposed at the moment. And I'm also going to very briefly discuss how you can identify safe care homes. So those are ones that are really managing their infection control well during lockdown. So how do you find a care home during lockdown? Well, to be honest, it's all about getting online. This is where you will get your information from. As Glenn has said, Autumna is the largest directory of social care providers in the country, and crucially, we allow you to compare one care home against another. Really important when you can't visit. But don't worry, if you're not tech savvy or you simply just want somebody to talk it through with, we have a free advice line and you can speak to any of the advisors and I can promise you they will be able to help you. So, I've mentioned the 4 key areas that you need to consider when you're looking for a care home. What are they? The first one is location. The second is understanding the type of care that you need. The third is the price. And the final one, availability. So that's how soon you need the care home. So let's start with number 1, location. And it should be your starting point. There are over 14,000 care homes in the country and you need to identify your location pretty tightly so that it works for your relative, but crucially also works for you. Many people get this bit wrong. They think that because Mum has always lived in Kent, she's lived in Kent all of her life, that's where the care home should be. And they are so used to that round trip from Birmingham, which is where they live, they do it once a month, they're so used to doing it, that it doesn't occur to them that Mum actually could be in a care home 5 minutes down the road from them. And I know it sounds really obvious when I'm talking about it now, but time and again, families overlook this simple fact that could really impact both them and their relatives' lives. The ability to pop in for a cup of tea for 30 minutes is invaluable. So the golden rule with location is always look in an area that will enable the person most likely to visit easily. So the second question is, what type of care home do I need? Now, care homes are broken down into two categories: residential care and nursing care. Both of these types of care can also support somebody who has dementia. Identifying which type of care home you need is really important before you start your research. It will save you so much time if you understand what you're looking for. And in the very simplest of terms, the difference between a residential care home and a nursing home is a nursing home will have nurses on site 24/7. That's a very simple differentiation, but it gives you a starting point. So if your relative has dementia, you will know that there are many different types of dementia, from mild forgetfulness to quite challenging behaviour. Don't worry, because there are care homes that can support any level of dementia, but you need to make sure the care home you're looking for matches the needs of your relative, whatever level that is. And a final point here, when you're deciding on the type of care that you need, make sure you future-proof the decision as much as possible. So if you think your relative might need nursing in the future, but they don't now, look for a dual registered care home. So that's a care home that offers residential and nursing care. You want to avoid somebody having to move because the care home can no longer meet their needs. And this applies to dementia care as well. If you think the nature of the dementia your relative has could develop, future-proof the home to make sure they can manage any escalating or changing behaviour or symptoms. And if you're not sure what you're looking for, call the Autumna advice line and we will be able to help you. So the third point is, how much is it going to cost? Well, if you're paying for your own care, or self-funding as it's called, this is a pretty important question. Nicky's going to discuss this in her presentation later on in much more detail. But the bottom line for a family is, if you run out of money and the care home asks you to leave, quite simply, you have chosen the wrong care home. Moving care homes because of poor choices at the start of your journey is the worst outcome for your relative, who could have settled, made friends, and be having, really enjoying their time there. So I would really urge you to take financial advice up front and be really honest with the care home about how long your funds will last. Care homes really understand these problems. It's also worth mentioning here that you may need to have the legal right to act on behalf of your relative, and Alison is going to talk through that in more detail when I've finished. But basically, the bottom line is, you need to get your ducks in line as far as your legal and financial matters regarding your relative are concerned. So then the fourth question is the availability. How quickly do you need your care home? In our experience, people need a care home pretty quickly. Most people choose a care home as a result of a crisis. They're therefore making this enormously important decision at a time of huge emotional strain. If you are able at all to plan ahead, without doubt, it will help you make an informed choice. What other decision, let's face it, in your life are you going to make that is this important, with such huge cost implications, in a week? And that's how long most people take. You're emotionally up in the air, you have little information to go on, and often little understanding of what you're buying. We know it's not a conversation most people want to have with a relative, but if there's any way you can have that conversation in advance, it will pay dividends. Now to the elephant in the room: coronavirus and care homes. Up until 6 weeks ago, the question most commonly asked on our advice line was, where is the best care home near me? About middle of March, end of March, that changed. and it changed to where is the safest care home near me. Now, this was a big problem because we didn't know. Nobody knew. All of the statistical evidence about care homes is aggregated. So we know that nearly 60% of care homes have not experienced any COVID-19 at all. The problem is nobody knows who the 60% are. So what we needed, what you needed, was information on an individual care home level. So we started looking around for third-party validated evidence that would help us to identify the safest care homes. And currently, the only evidence available is the COVID-19 emergency support framework that the Care Quality Commission is carrying out. And it assesses care homes on their ability to manage their infection rate. It's all we have, to be honest. So we have invited any care home who wants to publish this information, because the CQC isn't, to publish it on Autumna, and you can search by what you can see on the screen for safe care homes. It stands for symptom assessment for everyone. You can see where we're going with safe, but at the moment, all we've got is the COVID-19 report from the CQC. So it's the first phase of evidencing the enormous measures that care homes have gone to keep their residents and staff safe throughout coronavirus. And we're actively looking for more evidence that we can publish. So in summary, do your research, but before you start, make sure you have clearly identified these 4 points: your location, the type of care you need, the price you can afford, and how quickly you need that care home, and plan ahead if you can. Get online, compare the care homes, look at their Facebook pages. Facebook is fantastic to find out what a care home has been doing. Watch their videos. There's lots more videos coming up. It's interesting, but the side effect of coronavirus means that care homes have begun to virtually open their windows and doors. And you can now look inside online. So if you can search online and do your research, it will save you much more time and you'll make a more informed choice. And look out for the Glad to Care, hashtag Glad to Care posts, because it will showcase what the care homes are doing. And finally, if you need any help, and that's lovely Martha, by the way, on the screen there, if you need any help, do email me or give us a call. We would love to help you. Thank you very much.
Thank you very much for that, Debbie. Debbie Harris, of course, of Autumna. If you'd like more details and to visit the website, is autumna.co.uk. Some questions from me to you, firstly, Debbie, and don't forget to ask your questions in the Q&A box at the bottom of the screen there. You might have answered this already, Debbie, but again, how long do families usually have to find a care home?
Well, yesterday, 2 hours. We
2
had
hours.
a client who had 2 hours, yeah. On average, I would say it's between 1 and 2 weeks, but it depends on the circumstances. Hospital can be a week or less. It's a very quick decision, and very rarely longer than 2 weeks, very rarely. It's a lot of research you need to do in a very short time.
A lot of due diligence as well.
Yeah.
How are families choosing a care home when they can't really visit? As you mentioned, we've got coronavirus, COVID-19 at the moment, preventing a lot of people from doing a lot of things, least of all visiting a care home. But how are families choosing that all-important home when they can't actually visit?
It's online. It's the only thing you can do. It's videos and Facebook. It's watching the interactive stuff, I think, is having a huge influence on whether or not somebody chooses a particular care home over another. But if I was looking for my mum, and that's the starting point I always take, if I was looking for my mum, I would be looking at Facebook. I would be looking at videos, and I'd be doing my online research. We get an awful lot of people looking for care homes at 1 o'clock in the morning. You know, if it's online, you can do it at a time that's convenient to you.
Okay, lovely. Thank you very much for that. So don't forget Debbie's website once again, autumna.co.uk. Feel free to ask questions. We'll ask any questions you've got to put to Debbie towards the end, if we can, on our little Q&A session. Let's move on to Alison then, Alison Courtenay. Now, Alison is a legal expert at Parfitt Cresswell Solicitors, who have offices throughout the Southeast. Alison is an associate member of the Chartered Institute of Legal Executives and specialises in all aspects of private client work, including administration of estates, wills, powers of attorney, inheritance tax advice, and court of protection. Alison, you keep very busy. Good afternoon to you.
Good afternoon, Glenn. Yes, I certainly do. Yes, especially at the moment, we seem to be more busy than ever. But generally, there's no time that is any particularly busy than any other. So yes, yeah, very busy and very varied, and we have some lovely, lovely clients.
Okay.
So I shall share my screen. Let's see if this works, hopefully. Okay. Let's just, right. Does that come up?
Yep, we've got that.
Yeah, okay, lovely. All right, so good afternoon, everybody. I'm going to just go through some practical things for you on lasting powers of attorney. Many of you have probably come across difficulties of being able to help your loved ones if they don't have a lasting power of attorney document in place. And now I think more and more people are getting used to them and realising that they are something that they really need. So there are a couple of different types. The sort of things that I'll go through, I'll explain the two types. I'll explain why you should make one and what type of decisions it covers. Mental capacity is obviously something that's very important and comes into the making of the document. Choosing your attorneys, again, very important, because you are choosing people who you trust to do things for you if you can no longer do them. Then I'll just talk quickly about registering your power of attorney and how much it costs, whether you can change or amend your power of attorney when it ends, and what happens if you can't make a power of attorney, and that's generally because of mental capacity. So what is a lasting power of attorney? Well, it's a legal document. It allows you to plan ahead if you're doing this before you lose mental capacity, before you start to go possibly downhill with dementia. This is the sort of thing that you need to get in place as soon as you can, really. It means that you can choose who will make decisions on your behalf if there comes a time when you can't. So you would generally choose your family. Most people do if they've got family, you know, spouse or children, but not everybody has family, but they can still choose somebody that they know will have their best interests at heart. It makes sure that you and your loved ones keep control, because you are the one with the power that you are giving, and you are choosing who to give that to. And also it means that you can speak to your attorneys beforehand to let them know if you've got any specific wishes, and then they will bear those in mind if they need to make any decisions. You can put restrictions and preferences on a lasting power of attorney document. You have to be very careful with this, that you don't restrict it in such a way that it means that it cannot then be registered. So restrictions, you have to be careful with the actual wording. Preferences are, as they say, probably preferable, because then it's not going to restrict anything, it's just giving your attorneys guidance. So there are two different types of powers of attorney: property and financial affairs, and health and welfare. So your property and financial affairs document, this is what you would use mostly, because this can be used even if the person still has capacity, but supposing they are in hospital or having, you know, rehabilitation, they may have something that just makes them not quite able to deal with their finances, and they might ask their attorneys to do something for them. So as people get older, their finances get a little bit more complicated. Perhaps they don't understand them quite so well, and dealing with bills and setting up direct debits and banks and things like that are, frankly, they don't want to deal with them anymore, which means that their attorneys can do things for them. A lot of people, they lose mobility as well and can't get to the bank. So again, this is something that their attorneys can do for them. It does mean that they can sell property. Obviously, it's not taking it out of the donor's hands. If you make a property and financial affairs LPA, you're making this to make sure that you're protected and that your family are also looking out for you and being able to act for you and always in your best interests. They're not taking it away from you. You can still carry on for as long as you have the capacity to do so. Your health and welfare document, now that's slightly different because that can only be used if you lose mental capacity. So while you still have the capacity to speak to your doctor, to liaise with medical staff about your medication that you might have, or if you have any carers at home, if you are still involved in making those decisions, then you absolutely do that. Your attorneys would only make those decisions for you if you lose mental capacity. Now, in that health and welfare document, there's a separate power where you can give your attorneys the power to make specific decisions on life-sustaining treatment. And again, that's something that you would be able to talk to them first about. Hopefully it never happens. Why make an LPA? Well, exactly that you could lose capacity without realising, or you may just not be in the right frame of mind or medically able to do things for yourself, and this can happen to anybody at any time. Now, if you've got your document already in place, you know that you've covered yourself and your family and you won't have to worry. Your wishes can be carried out because you know that you will have already spoken to your attorneys, and so you've got peace of mind that if anything happens, if the worst happened, then you know that your family will be able to look out for you and to do what is necessary. If you don't have an LPA, or if you didn't make one before losing capacity, your family would only be able to go to the Court of Protection and apply for a deputyship order. That is much more expensive, takes far longer, and so putting an LPA in place first is the right thing to do. So mental capacity, you can only set one up if you have mental capacity as set out in the Mental Capacity Act. Now, mental capacity is legally defined as being able to make or communicate a particular decision and to be able to understand the consequence or outcome of that decision, and also to retain and process information. So that means that if the donor, who is the person that is making the document, if they decide to do something, whether it be financial or health-wise, and the family don't agree or think that it's a bad decision, does not mean that they have necessarily lost mental capacity or that they are incapable of making their own decisions. The attorneys can help them try to make their decisions, but they cannot just take it away from them if the donor still has mental capacity and wants to do something that maybe they don't agree with. Now, when you make when you make your power of attorney, a certificate provider is somebody that signs when you sign to make your document to confirm that you have got the mental capacity required at that time of signing to be able to make the document, and that you understand the full implications of the powers that you're giving to your attorneys and that you haven't been forced into making this document. So choosing your attorneys, as I said, generally family is what most people would go for, but not everybody has family. So sometimes it could be a friend or a relative, somebody that you trust, or if you really didn't have anybody, then you can employ a professional, so a solicitor or an accountant. They will usually only do a property and finance document. They won't act for health reasons, because that's more personal. And so generally the health, if you haven't got anybody to do that, you would be sort of involved with the social services and the medical profession. So you can have more than one attorney. They must be over 18, and you choose how your attorneys are to be appointed. So if you had two, for instance, if you appointed them jointly, that can sometimes be quite restrictive, because it means that they both always have to make all the decisions and sign everything at the same time. Most people will go for jointly and severally, and that means that one or either or any of your attorneys can act for you and on their own at any time, and it means that they don't necessarily have to liaise with the other attorneys to do so. So long as they are not bankrupt themselves, then they are able to act as your attorney. So when you register your document, once you've made it, so once it's signed by you, your certificate provider and your attorneys, it needs to be registered before it can be used. And there's an £82 registration fee for each document. At the moment, it's taking anything from 8 to 10 weeks to register, sometimes even up to 12. So obviously, the earlier you start the process, the better that is. But once you have signed your document, you've done your part, and the registration can continue. If you lose mental capacity before it is registered, that doesn't matter, because you've already made your document whilst you did have capacity. Your attorney can register your document for you if you do lose capacity, or if you can't manage to make the application yourself. And at this time, you can also notify somebody that you are registering your document, just as a safeguard for you. Sometimes, especially if it's not family, people like to notify another good friend or a sibling that they are making this power of attorney and who their attorney is, and it just covers them, so that if anything seemed to be wrong, or not quite right, then your chosen persons could get in touch with the Office of the Public Guardian, and then they could investigate. So can you change or amend your LPA? The simple answer is no, you can't. Once your document is made, once it is signed, you cannot change the document, because it's been signed also by a certificate provider who has confirmed your capacity to make that document. You can, once it's registered, update a change of name or address with the Office of the Public Guardian, and you would just need to get in touch with them and sort of update it over the phone, so long as you've still got the capacity to do so. And you can remove an attorney if you didn't want them to be your attorney anymore, or if there was a reason why they couldn't. But if you want to change your attorney, you have to make a new document, so a new lasting power of attorney. And when does an LPA end? Well, the idea is that it's for life. Hopefully, you make the document and you know that you are covered. If you have mental capacity still and you want to revoke your LPA, i.e. you don't want it anymore, you can do so, and again, let the OPG know. If you die, your LPA dies with you. Otherwise, it will always continue unless it is revoked. There are a couple of other ways that it can end, and that's to do with your attorneys. If they die themselves, if they lose capacity, if they become bankrupt, particularly if they are appointed jointly, because if you have a joint appointment of, say, 2 attorneys and one of them dies, that document can't be used anymore, because you don't have a joint appointment. The last attorney that's left cannot act on their own. So jointly and severally is always a better option generally. Possibly if you divorce and your spouse is your attorney, you wouldn't want them to act anymore. So again, you could update it, or they could be removed by the Court of Protection if they were seen not to be acting in your best interests. And as I said before, if you can't make a power of attorney, your family your next of kin, their only option is to go to the Court of Protection and apply for deputyship. Nobody has the right to do anything for you if you can't do things yourself unless they are appointed as your attorney. So again, if you have to go to the Court of Protection, you don't have any choice of who you are appointing, because you will have already lost mental capacity. The court will decide for you. And this is much longer and more expensive, can take up to 9 months or even a year to get a deputyship. So at the time when you most need it, you can't do anything for months and months and months. There are other fees as well to be paid with a deputyship, and that all adds to the cost. So just to sum up, your powers of attorney, really you have to think of as important as making a will. They are a document that everybody should consider. If you have got assets in your own name, if you own property, if you've got a bank account, because if something happens to you and your mental capacity, then nobody else can do anything for you. So the ideal thing is to get them in place as soon as you can. So I'm happy to take any questions. Just before then, I will just say that we have got a later living guide, which we are giving out free copies for anybody that wants to request one. So this is a book that Teresa Payne, who is the owner of Parfitt Cresswell, decided that she wanted everybody to be able to have access to legal matters to do with later living. There's all sorts of experts have contributed to this book, including myself and also Debbie as well, Debbie Atkins. As I say, if you wanted a copy of that, then feel very free to get in touch. And lastly, oh no, there just to say that that's my details. If anybody wanted to know any more about powers of attorney, then they can get in touch with me at laterliving@parfittcresswell.com or go onto our website. Thank you for listening.
Lovely. Thank you very much, Alison. Yes, we got one, a few actually. Sally Smith. Sally, hello. Thank you very much. Is completing an LPA online for a family member safe in this era of data protection? Is it a safe thing to do?
We would always say no. It is open to fraud, and this is the trouble. People say that they would like to do them online. Yes, it's cheaper because they're not paying solicitors' fees, but they're not getting any advice. They are just literally filling in details, making it up as they go along, and who knows, a neighbour could fill in the documents for somebody, just put the documents in front of them, get them to sign and send them off. They are then in control of their financial affairs. And so we would always recommend that you take proper advice.
Okay, thanks for that. Richard McIntyre. Richard, thanks for your question. And I feel guilty on this one. Do the panel have an LPA in place? I'm hosting this. I personally don't. I need to do it. Do you have it in place?
I do. I do.
Very naughty.
And my children.
Yeah. Yes. Oh, that's good. That's
a whole
good.
lot.
And
really
and parents. Yes.
Oh God, yeah.
Well, you've spurred me on. I need to get one sorted.
Bad boy.
You know where to come, Glenn.
Debbie Whitlock is saying to you, Alison, what's the difference between an LPA and an EPA?
Okay, so an EPA is an enduring power of attorney, which was the previous document before LPAs came into existence in 2007. So an EPA can only cover finances, it can't cover health. Lots of people made them right up until 2007 to quickly get something in writing, but they weren't registered, they were just something that they signed and then kept hold of. They are still valid, and if the person loses mental capacity, they will need to be registered to be able to use them. but they don't cover things such as investment managers, and they are very, very simple, and they don't cover anything to do with health. So again, yes, they are valid, but we would advise that they either update them or at least make a health and welfare document.
Okay, thanks for that, Alison. Another question on your subject, your specialist area. Joe Dufton's asking, what's the general cost of an LPA? That's something I would like to know, as I need to get one sorted.
So again, as I say, there's a registration fee. So if you were to do it online, yes, there's no cost. You're doing that. But as I say, you haven't got any advice if you're doing it yourself. There will always be the £82 registration fee, unless there are some times when, if somebody is on a very low income or something like that, they can get a fee remission or even exemption. But solicitors' costs, they vary. Speaking for ourselves, we would charge round about £750 to do both documents. I think a lot of places are, sort of £500 for one document, or a little bit more for both. But I think that covers all of the advice. It covers preparing the documents. It covers doing the application for registration, acting as certificate provider. So really, if you were to do it yourself and find your own certificate provider, I think you're getting good value for money.
Okay, and just a very quick question from me, as I want to get one sorted. What's the timeline? How quickly is an LPA in place?
So if we started it tomorrow, if you gave me your details tomorrow and I sat down and had a conversation with you and we went through, you decided to choose your attorneys, I can get the documents prepared quite quickly. Then it depends on where your attorneys are. Sometimes we've got attorneys abroad, so obviously that takes longer because they have to sign the document as well. But once it's all signed by everybody and then sent off for registration, first of all, there's a 3-week period that they have to legally wait to see if there are any objections, and then it could take another 6 weeks after then.
Okay, lovely. Thank you for that, Alison. Alison,
Thank you.
legal expert at Parfitt, Cresswell solicitors. Any other questions? I think that is it for the time being, Alison. Let's move on. Keep your questions coming in. We'll ask Debbie a few more questions. I can see a couple come in for Debbie. We'll ask those at the end. But Nicky Cave, Nicky's turn now. Nicky is a managing director and founder of the Eldercare Group, a firm offering advice to any family faced with privately funding the stay in a care home or paying for care at home. She has 30 years experience as a financial advisor, 20 of those years as a specialist in long-term care advice. Now, the business was set up as a result of Nicky's own experience of the care system when her grandparents needed long-term care. The family home was sold and the money used up, a route the family took as they didn't realise there was an alternative. That's an all too familiar story. Nicky and her team of advisors are members of the Society of Later Life Advisors and are unique in the financial services world as being the only firm in the UK that advises exclusively on solutions for funding care costs. So, Nicky, a lot there. Let's look forward to your presentation. Hello, good afternoon.
Hello, thank you very much. So I'll hopefully, third time lucky, we can screen share. Hurrah. Everyone see that? Thumbs up, brilliant. Okay, so so I have the unenviable task this afternoon of fitting the very large and complex topic of paying for care into 10 minutes. I might stretch it to 12. I'm unlikely therefore to be able to answer all your questions, I think, as we go through, so just carry on using that Q&A facility or send us a message. We can contact you privately afterwards. So I thought the best approach, with it being such a big topic, was just to really pick the 3 questions that we are most commonly asked by families and attempt to answer those. So the first is really to understand who pays for a stay in a care home. If you've not experienced the system before, it can look pretty confusing, like that signpost, and it can often come as a bit of a shock if you, as I say, haven't had any experience or exposure to it. We'll have a look at whether a property has to be sold to pay for care. It's a very popular headline, isn't it, that the council will take the house or we have to sell a property. Are there other options? Let's dig into that a little. And with no care cap currently having been implemented by a government to date. Is there a way that an individual could actually cap their own costs? So we'll spend a short period of time on that. So in very, very simple terms, there are 3 funding streams available when someone needs to move into a care home. It may be that the local authority pays for them, social services, the council, it's fundamentally the same place. It could be that the National Health Service funds somebody's care, but if you don't have funding available to you from either of those sources, that's where we get this term self-funder or private fee payer. So there will be some overlap between these 3 strands, but as I say, I have got to keep it simple for the purposes of today. So looking really at local authority funding and how one would qualify for that, I think the first and often overlooked point really is entry to any such funding. To get funding, a social worker needs to have carried out a care needs assessment, okay, first and foremost. Capital then comes into it. So we have these 2, but they come in this order. So it has to be a care needs assessment first, followed by a financial assessment. I know that doesn't actually play out all the time. So the assessment will confirm whether a person's care needs meet an agreed set of criteria, and then to the finances. So the 23,250, that's the capital limit in England and Northern Ireland. It's a little higher in Scotland, and actually in Wales it's quite a lot more generous. It's £50,000. So what counts towards a person's capital? Well, if I were being fairly flippant, I might say pretty much everything, but there are some notable exceptions. So if you're married, then anything owned by your spouse is not taken into account. That's really important. Anything you own jointly with your spouse, then 50% of that can be taken into account. And of course, anything you own in your own name, then 100% of that is taken into account. But it's really important to note that your property, if your spouse is living in the property, that is not taken into account. That's not retrospective. Equally, if a relative over 60 lives there, although I feel I have to point out that if a relative age 61 was to move into care the day that you moved out into a care home, that won't be an exclusion. Okay, the local authority might spot something amiss there. One other notable exception, looked actually by families, they don't realise this is in the paperwork, but if you have an investment bond that includes life assurance, then that's a disregarded asset as well. It might not be apparent to you, but it would be quite apparent to us what type of bond that is, so just check if you're unsure. Words like life assured or values going up as well as down, that's often an indicator, okay? So capital is obviously dictated by those thresholds, but income matters as well. And again, this is often overlooked. So you might qualify under the capital rules, but income is included also. So local authorities do have a limit on what they will pay for somebody's care. It's not meant to be an arbitrary figure. It is actually supposed to be based around that assessment that was carried out. But let's say for the purpose of this exercise, they agreed to pay £500 a week, but you have a £200 a week pension, then broadly, they're going to be contributing about £300. So it's a combined contribution, if you will. So in setting that amount that they'll pay, they must have contracted a genuine care home place at that cost, and it would have to be a place that meets your needs and has no requirement for a family top-up. It's only if you were to choose an alternative care home that someone, for example, in your family might be asked to pay a third-party top-up. So I appreciate most of the audience on today are self-funders, so this really just is for information, but of course, it's more complicated than this naturally, but this is the simplified version. So that's our means-tested system, if you like. That's the system when it comes to social care. But the second strand I touched on earlier, National Health Service funding. So this is not means-tested. So this has nothing to do with your finances, but eligibility is driven by what your healthcare needs are, as opposed to what your day-to-day personal care needs are. So to qualify, your primary need must be a health need. Those needs are likely to be described in words such as complex, unstable, unpredictable. So it's often referred to as pre-nursing care, but the technical term there, NHS continuing healthcare. There is a lower level, so if you had some healthcare needs but didn't qualify for this, there's a funded nursing care contribution, currently £183.92 per week, and that's paid directly to the care provider. It's fair to say, and I'm sure if you've read about these scenarios, often covered in the press, it is quite difficult to qualify, and you would do well, in my opinion, to have an advocate support you through any claim. It might be something that you don't qualify for at the early part of your care journey, but might qualify for later on. So if you are not eligible for state funding because you have too much money, or not eligible for NHS funding because you're not poorly enough, then by powers of deduction, you'll see that you're a self-funder, all pet costs having to be met personally. The only bit of good news I have for you, I'm afraid, this afternoon really, is that you can continue to receive or make a claim for attendance allowance. So this is a state benefit that's tax-free, not means tested. The difference between the two rates appears to be if you need somebody to attend to you during the night time for at least 20 minutes or more, that's the trigger. Most people that we talk to seem to think attendance allowance stops when you move into a care home, but if you are self-funding, that's definitely not the case. Good news over, or maybe a tiny bit more good news here when it comes to the property. So I mentioned earlier that it's assumed, and often the language used is that the property will be taken. It's not necessarily always the case that the house has to be sold, and it's certainly never taken by the local authority. It might be taken into account. That's slightly different. So if you have a property that's going to be vacant as a result of you moving into care, then there is some assistance available from the state if your other money is under that capital limit. So if your other funds in England are under 23,250. If it's a permanent move into care, then that property value has to be ignored for the first 12 weeks of that permanent move, and the local authority will pay along the lines of the way I described earlier. So the care home is perfectly at liberty to charge a top up in this scenario during the 12 weeks because the local authority are unlikely to meet their full fee. At the end of the 12 weeks, it's unlikely that you have sold if that was what you decided to do, but it was to give you some thinking time and to consider whether actually renting the property out might be preferable. So if that were your decision, most people would still find themselves with what we call a shortfall. So it's possible that the rent plus the pensions plus the attendance allowance still doesn't quite cover the care home fees of the place you've chosen. So if that's the case, you actually are able to apply to your local authority for what they call a deferred payment agreement, a loan really. There are setting up costs, there is interest charge, but it's pretty low, I would say lower than standard mortgage rates, and you're not servicing that loan, so you're not paying anything back as you go along, it's all repaid upon your death. So you've still got the asset, and the asset may obviously go up in value during that time. So it's not for everybody. Some people don't want the aggro of tenants and letting a property, but a lot of people don't necessarily know about it. So we said today we would try and dispel some myths. So that would be one of them. So you do have options. Moving really to the focus of self-funders and the problems they face, the two biggest concerns that self-funders have shared with us over the last 15 years or so are, if you don't have that's Emma Thompson, by the way, from Harry Potter, in case you don't recognise her. If you don't have a crystal ball, then how do you know what you can afford? So going back to Debbie's point about the funding window, how do you cash flow forecast if you don't know how long you'll actually be in a care home? And the other concern is the money running out. Well, what happens if the money runs out? Will I be able to stay at this care home or not? So a good proportion of the self-funders that we talk to have enough money to pay for maybe 4 or 6 years if they've had a property to sell. But we all know that that statistic of 2 years in a care home, there are many, many people in care homes that live a lot longer than that. So it's feasible for many families that the money could run out. Yes, there's the option of taking independent financial advice and investing those funds. But really, in the current climate, my opinion is that just seeks to eke the money out a little longer, unless you are prepared to invest in the riskier types of funds that are associated with higher returns, and that's something most attorneys, in our experience, aren't comfortable to do. So there is an alternative, but I must caveat this, as I always do, with a big warning that this is not a universal panacea. It's absolutely not suitable or even appropriate for all self-funders. But the fact of the matter, and this is borne out every time we do these seminars in person in care homes, it's borne out that 85% of self-funders never get to hear about this solution. Therefore, they're denied the opportunity to make an informed decision. And going back to Glenn's introduction, my experience with my grandparents, no one told us about it, so the property was sold, the money was used, nothing any of us could do about it without the benefit of hindsight. So what solution am I talking about? I'm talking about a financial product here that can put a cap on care costs in the event of longevity. At its most simple, it's a type of insurance, but it's unusual in that you are insuring at the point of need. Now, you could never insure a car after you've crashed it, or insure your house after the bathroom ceiling caved in, but you can insure your care costs as you move into a care home, or even actually after you've moved in. Some families, it will take time to sell a property, so we could be looking at solutions a few months after they've moved into a care home. At its more technical, it's called a care fees annuity or an immediate needs annuity, but you can only buy one if you have a current care need that you're paying for yourself. So it can't be purchased in advance. Those pre-funded policies don't exist at the moment. So the mechanics are that you pay a one-off lump sum up front to an insurance company, and in return, the insurance company pays a guaranteed tax-free income for the rest of your life. We often get asked, as you would expect, the question, well, how much does one of these cost? And I generally sound very political when I duck the answer, but the truth of the matter is that the amount depends on your age, what your GP says about you, and what your care provider says about your day-to-day needs, and how much income you require, which is obviously different from person to person. So every case genuinely is different. So I ducked that answer again, didn't I? All these products are fully protected by the Financial Services Compensation Scheme. So they really are very safe. There's no limit. The 85,000 limit that you have in Bank and Building Society accounts doesn't apply to these types of products. And there's two real reasons, in my experience, people buy these. It's either to ring fence some of the remaining estate for beneficiaries, or it's to effectively opt out of the state system, avoiding the need to ask for funding from the local authority and the uncertainty that might bring in terms of whether you can stay at that particular care home. So really, just in conclusion there, it's not for everyone, that product, but it's worth knowing about. As I say, with that 85% statistics, I think it's always worth a mention. Needless to say, there's a lot more to it than that. For example, you need to know that you can lose quite a lot of money if care isn't needed for very long, but that's as technical and as far as I can really go with the time constraints today. So in closing, you should be aware that we, Eldercare Solutions, are the only firm in the UK currently able to get care annuity quotes for you from 4 insurance companies. One insurer is, I'll say, new to the market. They started the launch with us a year ago, and at the moment they seem happy with that partnership as an exclusive arrangement. Now, the price differences between companies can be significant, so we will always get clients 4 quotes, and that's a real differentiator. If care homes that you're speaking with signpost you to us, that might be why. All our advisors have been accredited by the Society of Later Life Advisors, as Glenn mentioned. We don't charge a penny for doing the research, and actually, based on our experience, we can probably tell you quite quickly during a short phone call whether this product is likely to be appropriate and affordable for you, as long as we know age and how much income is needed. So if it's not going to do what it says on the tin, then we'll let you know, and we won't lead you up the garden path. So hopefully we've made a bit of a start here in clarifying a few of the issues for you, but as you can imagine, it's a very big topic, as I say, to fit into 10 minutes. So I apologise if it's not got the detail that you would like, but we do have a consumer guide, a paying for care guide that can be downloaded from our website, eldercaregroup.co.uk, or of course there's access to our free phone number. So I will happily take questions now, all with the group.
Thanks very much for that, Nicky. And just a quick hello from Ben McDonald. Hello, Nicky, your biggest fan.
Oh,
Ben
hello,
from
Ben.
B&M Care.
Oh, I love B&M Care.
Just a quick one here. What's the downside of the care annuity? As it sounds almost too good to be true, Nicky.
Well, the downside is that you pay money in based on the insurer, I suppose, crudely speaking, giving a life expectancy. And if you don't live as long as they've predicted, then there's generally no return to the estate. So that bothers some families, of course. Some families just view it as, you know, it's mum's money for mum's care. If it's gone, it's gone. But there are ways to mitigate it. You can buy extra life cover, for example, or you can buy them on what we call a deferred start date. So you're not paying the whole lump sum up front, you stagger it. So that's the downside, really, that the person might die and money is lost. But other than that, it really is as straightforward as it seems. I maybe have a few seconds just to give an example of a 99-year-old lady who approached me directly, and a number of years ago she'd made the decision to move into care. She had a finite pot of money. It looked like it may very well see her through. Unfortunately, we got a death notification last month, but she died at 108.
Wow.
She spent £90,000 on her plan, and I think we worked out it paid out £296,000, and she would have well run out of money by that point.
Wow.
So of course that's an extreme example, of course, but many people would be quite sceptical of a 99-year-old needing one of these. So
that's a great age. 108, that's incredible. Also, we hear lots of people and lots of sources saying that we should put our property into a trust, and that way we don't have to pay for our own care. What's the truth behind that?
Well, Alison will give you a view, I guess, on certain legal aspects around that, but I keep a very close eye on local ombudsman reports and findings, and generally speaking, if anything looks like it's been done to deprive oneself of assets to avoid paying for care, then the local authority will call it out as deliberate deprivation. So if a protected property trust, as they were sometimes marketed, if that was marketed as being to avoid care fees, it probably won't work, is my view. Do you have a view, Alison?
I would say exactly the same, is that, you know, if it sounds too good to be true, then yes, it generally is. And the local authority don't have any time limit as to how far back they can go to look at past assets if they think that you've deliberately deprived yourself of assets, and so it's unlikely to work.
All right.
And it deprives you of choice, doesn't it? You know, in Debbie's presentation, we talked very much about the different types of homes, and, you know, the world's your oyster in terms of choice. If you don't have assets, you don't have
no
choice.
Very true. Yeah.
Okay, thank you for that. Nicky Cave, Managing Director and Founder of Eldercare Group. Don't forget, if you want more details of what Nicky's team get up to, eldercaregroup.co.uk. Just a bit of a sweep up with some questions that have come through. One to you, Debbie, and that is, what part of Facebook do you find the safe care homes? How do you find them on Facebook?
You don't. Sorry if that wasn't clear. The SAFE logo and the Safe Care Homes are only available on Autumna. So you can go onto Autumna and you can search in the additional filters for safe care homes. We only launched this 2 weeks ago. This is as a direct result of COVID. You know, so we responded to a need and we've acted really quickly.
Thanks for that. One for you, Alison, Courtenay. Paul Taylor says, thanks for the webinar, very informative, thanks very much. Question to Alison. My brother and I have both LPAs in place for my mother. My mother's ex-partner, however, has challenged the health LPA and begun an investigation with the Office of the Courts. This was about 11 months ago, and despite chasing and providing all information requested, we still don't have an outcome. What happens in the likely event of this decision going against us, Alison?
Oh, I mean, the courts would have to take all of the circumstances into account. They would look at why it's being challenged. They would look at when it was made and the certificate provider that you know, confirmed mental capacity when the donor made the document, and really they would just look at everything and then have to make a decision based on that. But there would have to be lots and lots of evidence and good reasons why, if somebody challenged it, why that would be proved successful, because if it was registered and made and registered originally, it must have, it should have gone through and been properly done at the time, and certificated. So it might be a disgruntled member of the family. Sometimes that happens when families sort of split further down the line and there are problems between siblings or something like that. Most people, I would say, unless there's a real need to do it, wouldn't take it that far. It's more, usually can be sorted out within the family.
Okay, one last chance then, Nicky, Alison, Debbie, to say anything before we sign off. I think we're pretty well on time, just a little over.
Well, I hope everybody found it useful.
Yeah, that's the main thing.
I think the thing that's come out of this is, if you're looking for care, be informed, get information, be informed. That's how you find the best care.
Yeah, and again, with powers of attorney, sooner rather than later. Don't leave it until you need it, because then you can't, it's too late.
Okay. Well, thank you, everybody, ladies and gentlemen, for your questions through this afternoon. Debbie Harris from Autumna, Alison Courtenay, legal expert at Parfitt, Cresswell, solicitors, offices throughout the South and South East, and Nicky Cave, Managing Director of Eldercare Group. If you'd like more information on Glad to Care Week, which is on now until Sunday, the 12th of July, that's this Sunday, head over to gladtocare.com. Use the hashtag as well up there, where you can, of course, share stories and check out activities and get involved. From me, Glenn Thompson, thank you for joining us on this webinar today, and hopefully we'll see you again in the future. Take care.